Hello, everyone. Welcome to the Financial Profit. I am Victor Durganov, and today we're going to be discussing one of my favorite companies, Palantir. Okay, so just to give you some background information on Palantir, I've been very bullish and very vocal on Palantir for several years now. I acquired most of my stake around late 2022 to early 2023. During this time frame, Palantir was trading around $7 or $8, then it was around $10, then it was around $12 and $15. So basically, most of my Palantir position was acquired in this $7 to $15 range. Now, fast forward to around now, and Palantir has just surged to over $100 because it reported a better than anticipated earnings report. Now, the stock has now appreciated by about 1,300% since its low point when we started accumulating in 2022 and 2023. Now, of course, I've trimmed my Palantir position along the way. However, I remained bullish in my previous Palantir analysis, and stock still makes up about 4% of my holdings, and it remains a very considerable position. Now, Palantir just reported another much better than expected quarter, and the stock surged to over $100. Now, this has been a remarkable rise for Palantir considering that its stock was below 750 less than 2 years ago. So, what about Palantir now that it's around 100? It's becoming increasingly costly now, so is it still wise to hold a significant position up here? So, here's my view on Palantir. Now, Palantir remains a one-of-a-kind, highly disruptive company with the potential to increase its market share, revenues, and profitability considerably in future years. So, despite being technically overbought now and, quote, expensive, it likely needs a consolidation and a pullback phase, but still, Palantir remains a buy in the intermediate and long term, in my view. Okay, so let's take a look at the technical image here. So, we see Palantir having this huge surge, basically spiking by about 20% here. And this is just on the back of these. And I've looked at these, and the results are excellent, and the guidance is also spectacular. But we also need to kind of gauge the magnitude of this move because Palantir, it's not a small cap company anymore. It's about a $200 billion company actually now. So this move here represents a move of about not quite 50 billion, but close to 40 billion, which is quite a significant move indeed for a company like Palantir, considering that their revenues are still relatively low to command such a high valuation. So that's basically where the debate is at right now. Is Palantir worth such a hefty premium here? Now, if we take a look a little bit longer term at a 4-hour chart, so we see that Palantir was all the way down to $20 around basically the lows in the leading up to the summer, and it hit about a low of about $20 during the crash in August. So I mean, it's actually appreciated by about 5x since August. So I mean, a 5x return in about 6 months is remarkable. I mean, just astounding. So this move has been stellar. But we should be cautious here in my view because it's been such a violent move higher. So I'm still keeping a part of my position here, but I have a part of my position hedged, and I actually took a little profits this morning also. So I'm potentially looking for a pullback on a broad market correction, or maybe potentially on a stock specific correction on some worsening sentiment or bad news that could possibly make Palantir fall back to the $80 or $70 range. Basically, I believe that the $80 and $70 range would be a pretty good buy-in range now. Well, considering that the stock is much, you could see about a 20 or 30% correction transpire in the future, which could potentially take us down into this $80 to $70 buy-in range, which I would use to actually increase my Palantir position for the next kind of consolidation phase and potential move higher in the future. Okay, so let's discuss some of these earnings numbers out of Palantir. Now, we have just basically outstanding results. So Palantir delivered non-GAAP EPS of 14 cents. This was a 3-cent beat over the estimates. Now, revenue came in at 827.52 million. This was a beat of 46.28 million, which is very significant. And this represented a staggering 36% year-over increase. Now, the company also closed 129 deals worth at least 1 million in the quarter, with 32 deals worth at least 10 million. Palantir closed a record 803 million of U.S. commercial total contract value, a 134% year-over-year increase. and customer count grew by 43% year over year and 13% quarter over quarter. So I think the really big story here is how the US commercial segment just keeps growing and growing for Palantir and just continues to become a more and more significant portion of its business, which is great. It signals that American companies find Palantir's AIP platform and it's to be the most excellent optimization product tool on the market that any company or any organization can benefit from. Now, while these results were great, Palantir's guidance was actually just pretty much spectacular. For Q1, Palantir expects revenues between 858 to 862 million versus the consensus estimate for just 799 million. So we're looking at about a 7.5 guide higher on sales, which is very robust. Now, this dynamic suggests that future earnings estimates could be adjusted higher, potentially providing more momentum for Palantir stock. Also, Palantir's results imply its business is firing on all cylinders, and we could continue seeing outperformance as we advance. Now, for the full year, Palantir expects revenue between 3.741 to 3.757 billion versus the consensus 3.53 billion range. So the bottom line is that we're seeing really, really solid growth here for Palantir, and we're seeing excellent projections. The company projects 31% revenue growth in 2025 this year. So, and these are basically base case numbers that the company is putting forth. But in a bullish case scenario, I think we could see more like 33 to 35% sales growth this year, and potentially around 30% sales growth next year as well. So we're just seeing an excellent growth dynamic here out of Palantir. So perhaps most notably was Palantir's U.S. commercial revenues increasing by a staggering 64% year over year. So this illustrates enormous demand for AIP in the U.S. Now, if we look at some full year highlights just for 2024, some of these numbers are just simply staggering. So U.S. revenue grew at 38% year over year to 1.9 billion. U.S. commercial revenue grew at 54% year over year. This is for the full year of 2024. U.S. government revenue grew by 30% year over year. The general revenue for Palantir increased by 29% year over year. So we are seeing some very, very impressive statistics. Adjusted EPS came in at 41 cents, higher than expected. So now, looking forward, we need to consider some things. So I think that it's really important. A really important takeaway is that it doesn't matter if you are an American company or a foreign entity. Basically, your enterprise, whether it's government or it's a company, you can benefit from Palantir's optimization platform. So that's the bottom line, is that the market remains massive for Palantir, which gives it an enormously long growth runway, and the company can potentially become even more basically even more profitable than anticipated. So let's look at some of these projections for next year. And the consensus revenue estimate was 3.54 billion for Palantir. Now, Palantir just came out saying that it's going to report around 3.75 billion. So now this will no longer be the higher end estimate. This will now should be the consensus estimate for this year. Therefore, 3.75 billion in the near term should become the consensus estimate, and the higher end estimate may be around 3.8 or 3.9 billion for this year. Likewise, we need to revise our projections for next year, where the consensus estimate was only for about 4.4 billion for next year. Now, if we consider that Palantir's sales growth is reaccelerating here, and we could see 30 plus sales growth this year and next year, this implies that we could see between 5 and 5.5 billion. So towards the higher end of the range, 5 to 5.5 billion. My estimate is for around 5.25 billion in sales for 2026. And likewise, we can look to basically increase all of these sales estimates basically moving forward. So now let's see here. So again, the consensus sales estimate for 2025 is, now we know that Palantir just announced 3.75 billion. So we're going to need to see some widespread revisions. Now, Palantir was expected to put up only 24% sales growth this year, yet the company said it guided 31. Now, what that tells me is that Palantir could even be possibly sandbagging here. So it could deliver 33 to 35% in sales this year. That's in a bullish case scenario. Now an increase to the 4.4 the anticipated 4.4 billion range would only be about 17%, which doesn't make sense growth-wise. We'll probably see close to 30% in growth next year, which should get us to around that 5 billion figure. Now, given that Palantir's sales growth continues increasing, its earnings per share could skyrocket basically. So let's see what the projections are here. So the market's projecting about 52 cents in EPS this year, which seems pretty low. 61 as the average estimate next year, which also seems pretty pessimistic, and so on. So let's see what Palantir could actually earn, which is why I believe its P ratio is so elevated, because the market believes it can probably earn more than the analysts keep estimating, and Palantir basically continuously beats both on revenues and earnings per share. So let's look at the picture here. So considering Palantir's rapid sales rise, its earnings could increase substantially in future years. So Palantir is becoming increasingly profitable, and given that it has a massively profitable 80% plus growth margin, it can aim for 40 to 50% net income margin down the line. Palantir is already guiding to adjusted operating income from operations to about 1.55 to 1.57 billion this year, which represents a margin of 42%, which is just massive. Now, on an adjustment basis, Palantir delivered 41 cents in EPS in 2024. This represents approximately 1 billion worth of net income, adjusted net income. Now, Palantir could increase its adjusted net income from, the 35% range to 40 or 45% in future years. Now, a 40% net income margin on the 3.75 billion in sales that are projected for this year would equate to an adjusted income of about 1.5 billion, or roughly 61 cents per share, which is considerably higher than the 52-cent consensus estimate. Now, given that Palantir is a high-growth company, we should be looking at 2026 and beyond. Now, 2026 could be another excellent year, as Palantir's growth could continue to accelerate, generating around 5 to 5.5 billion in sales. If we take the mid-range of that range, 5.25 billion, and apply a 40% adjusted net income margin, we arrive at a net income of about $2.1 billion, which would translate to about 85 cents in EPS. So we're talking about the potential for 85 cents in EPS next year, just in 2026. Moreover, let's look further out to 2027. Assuming that Palantir's growth rate remains about consistent and comes in at around 29% in 2027, this could bring Palantir's sales up to roughly $6.8 billion. Now, applying a slightly higher 42% adjusted net income margin could provide a net income of approximately 2.86 billion, or roughly $1.14 in EPS for Palantir in 2027 Now, granted, with Palantir trading around $100, we're still looking at a relatively high PE ratio of roughly 88 for 2018 for 2026. So with a forward PE ratio of around 120, yes, Palantir does not appear cheap here, but nonetheless, it has a lot of potential because it is a very unique company. It is a one-of-a-kind company, basically a monopoly. So technically, yes, Palantir is expensive here, and the stock may have limited upside potential from current levels in the near term. Nonetheless, given Palantir's stellar performance and continuous outperformance, the stock remains an excellent intermediate and long-term investment in my view, and it's especially a good buy on a correction or a solid pullback of around 20 or even 30%, or even maybe greater than 30%, which is possible because Palantir is so volatile, so it could see a volatile correction in the future. Now, I would look to repurchase more Palantir stock if it goes lower possibly in the around $80, or better yet, even in the $80 to $70 range. Now, looking longer term, we could see Palantir's sales growth continuing at around 25 to 30% after 2027, which could potentially increase its earnings per share to around $2 to $2.50 by 2030, which could imply that Palantir's forward P ratio may fall by then. I mean, it doesn't have to stay elevated at 100. It could, decline to 80 or 70 by 2030, but that would still be enough to keep the stock price, or get the stock price up to maybe $200 or $250 by then. So definitely, while we don't have perhaps spectacular upside ahead for Palantir, there's definitely some upside ahead for the stock in my view. Now, that's basically my report on Palantir. While Palantir is expensive, I believe it is a worthy intermediate and long-term investment. And I also think that we should be buying the dips in Palantir. And I also believe that in a bullish case scenario, Palantir could report substantially higher sales than I anticipate in this article, and it can even report much higher earnings than I envisioned. Therefore, its stock price theoretically could go much higher than 200 or 250 by 2030. So I want to thank you all for watching my report. If you enjoyed my video, please click like, press that subscribe button to see more of my videos in the future, and you can also follow me, Victor Durganoff, the Financial Prophet, at seekingalpha.com. Thank you very much for watching my video. Goodbye, and have a wonderful day.